Okay, welcome back. It's my pleasure to introduce our first panel. Actually, I'm just going to introduce the moderator, and then he'll introduce the panel. So this is a panel on governance in the blockchain, which is a perfect topic to follow the fireside chat with Benham and then the key questions. And I will reiterate what JP said. If you have comments or suggestions on the questions, please make sure to talk to me or JP or Pam. We want to capture as much input as possible, or send us an email afterwards or a text or however you like to communicate. We'd love to get your input on those questions. That's, I think, one of the biggest accomplishments that we hope to do this year, the first year of the DeCenter, in addition to the two symposia, is to create a white paper that really frames up the key questions that need to be answered. So with that, I'd like to introduce Nolan McCarty, who will be moderating this panel. So Nolan is the Susan Ode Brown Professor of Politics and Public Affairs in Princeton's School of Public and International Affairs. He's also been an incredibly valuable member of the steering committee. So even though he's not a co-founder of the DeCenter, I would say that he's one of our earliest quote-unquote employees, even though we don't pay him anything. He's been a really great thought leader, bringing in the side of policy and politics to the work that we're doing at the DeCenter. So we're just really thrilled to have Nolan a part of the DeCenter leadership and also in moderating this panel. So please go ahead.
Great. Thanks, Andrea. So as JP mentioned earlier, the mission of the DeCenter is research and teaching on whether blockchain and Web 3.0 and other technologies can be used in ways that provide broad economic, social, and political benefits. So in this regard, the question about the usage of these technologies in governance of society, governance of organization, new organizational forms, is really important to the development of the center. Clearly, the question of governance is one of the oldest ones we have. If you think about thoughts about how to govern better and more effectively, those debates are as old as human society. So really the question, and the way I want to frame the question, is whether or not blockchain and related technologies present comparative improvements upon governance above and beyond the governance mechanisms that we have used to date, things like democracy or corporate law, representative government. And then secondly, more directly, can it be used to build organizations that elicit greater participation, engagement, and legitimacy than the types of governing institutions that we have used to date? So to address these questions, we have assembled a terrific panel, a very expert and distinguished panel. I'm going to introduce them only by title, but you should feel free to scan the QR code on the back of your program, to get the full measure of their accomplishments. So first, to kick things off, we have Porter Smith, who's the head of network operations and a deal partner at A16Z. So Porter, I was hoping that you could kind of lay the setting. Obviously, in your position, you're engaged with a lot of people who are developing new products and new organizations in this space. And so I thought you could kick things off by letting us know what you see going on in this area and what you think the promising areas and what are some of the pitfalls.
Sure. Thanks so much. Great to see everyone. Great to be here. And it was wonderful listening to JP's introduction because it hit on a lot of themes that we focus on at A16Z, which is that, crypto, I think, has embedded financial rails, which is what everyone consistently focuses on, and that's very important. But it's also a net new computing paradigm. It's a new form of decentralized computing that is just the latest evolution in computing. So you can go back to analog, then digital, then mainframes, then PCs, then you form networks with perhaps ARPANET, internet, you go to mobile, and then you hit crypto. And what's interesting about crypto is it inverts the hardware and software layers, where now you have decentralized hardware, which gives you different things than centralized hardware does, as we've seen with the current iteration of the internet. And so this is kind of the lens through which we view a lot of projects and investing at A16Z. And something that's very important about that is we have decentralized all sorts of institutions historically. We've decentralized governments. We started that experiment hundreds of years ago. It's still ongoing today, obviously. A question that I ask myself frequently is what happens if you can decentralize businesses? Does it make sense? In what context does it make sense? oftentimes we have businesses today that are large tech platforms that are replacing what were previously publicly governed public commons, but they don't have democratic institutions and democratic pathways that those public commons had. So Web3 offers an interesting new way of perhaps fixing some of those issues, and the token is the vehicle through which you could do that. Now, there's a delineation, I think, in tokens where you have infrastructure layer tokens at the base, which represents scarce computing space on some sort of a chain, a virtual computer. And then on top of that, you have application layer tokens. These application layer tokens often come with different embedded dynamics. I look at it as kind of a triad. So you have political rights, which is governance type rights. You have economic rights, which are ownership claims on the network. And then you have some sort of utility functionality in the token, which is where things can really get interesting. And you have a net new item that hasn't existed before, a new digital primitive to participate in these networks. And so something that makes Web3 different that we look at often is how do you participate in a network from an investing perspective, because it's very different than traditional investing. You're intertwining owners and users in a new and different way. So it's almost an activist style of investing, except I think it's much more positive sum than historically what we've considered activist investing to be, because you have a creative spark over here from smart founders that do brilliant things and deploy a set of software into the wild. And then it gets passed off to a community. And the question right now, one of the open questions, in fact, is how do you take that torch and run with it as a decentralized community? Can you? And is the network you're producing more valuable on the backside? And so one way to kind of look at this problem, or one lens to view it, is you have kind of often immature, volatile, open systems that go through a bit of a J-curve. And the comparison here is Wikipedia versus Microsoft Encarta, where early on with open systems, they're very volatile and you have no filter mechanism. So you have all sorts of inputs coming into these systems, just like Wikipedia did early on and no one trusts it. On the other hand, for closed centralized systems, you have groups of experts, very smart, very talented, and they have a better product initially. But what happens is you kind of go through this trough of volatility or this trough of openness. And if you can come through the other side of that trough with a set of experts and a product that works and a community that's very invested in what you're doing, you have an open architecture that widens the aperture for participation, just like Wikipedia does, that leads to a much more scalable platform on the backside than you can ever get in a closed system. So the million-dollar question is, which systems make sense to be totally open like this, and which systems make more sense to be closed? And there's different businesses that will evolve, right? Coinbase will probably never be on the fully open end of the spectrum. They're a public company in the US, and they have a business that works for them. But there's other platforms that might in the open computing paradigm, and that's where I spend a lot of time and focus a lot of our efforts.
Great, thanks. So next we have Todd Henderson from the University of Chicago Law School, who's a specialist in corporate law. So as a specialist in corporate law, you're an expert in the older forms of organizational governance. And so we thought you might be in a very good perspective to engage in this comparative exercise of comparing what's happening in the decentralized space with the kind of traditional corporate structure.
Great, thanks for having me. It's super to be back on campus. When I was here as a student, I got a B in my the one computer science class I took. So I'm going to talk about railroads instead. In 1800, it cost about $1,000 to start a factory making pins or sailcloth or something like that. By 1840, the cost of laying 1 mile of railroad track was $25,000. Building a railroad between New York and Philadelphia vastly exceeded the wealth of any individual. That means people needed to cooperate at scale. And so we had to invent these things called corporations that allowed people to cooperate at scale. And those raised problems because now I'm going to turn over my money to somebody else, and that person is going to be in charge of running the railroad. And because I live in Pittsburgh and I just am giving you money, I have to trust that you're going to spend my money wisely, something JP talked about, this importance of trust. And so we built this whole governance system, government did it in corporate law, that lets us trust that when I turn my money over to the railroad or Microsoft or whatever, that they're going to spend this money wisely. And I mean, I teach lots of classes about all the problems and things like that. So there's some external technology, the railroad, that comes along and is like, we got to invent this new form of governance. That form of governance is centralized in the sense that there are a few people, not centralized, government centralized, but they're government rights rules that a few people get to control the the investments of a lot of other people. And this is the lens that the bureaucrats that are making decisions in Washington think about this. Gary Gensler wasn't here this morning, but he's got this same test in his head, like, I'm turning over my money to you, you're someone who's in charge, you are gonna rip me off, and therefore applying the old securities laws test to these things, which I can talk about later, I think is a terrible idea. Other changes come. The centralized governance doesn't just have to be government. In 1792, New York State passed a statute that made brokerage contracts unenforceable. That means the brokers in Lower Manhattan trading government debt would be out of business. No one would trust that they would fall through on their contracts because they couldn't be sued in court if they cheated their customers. So these brokers said, we can't use the courts. What could we do? Let's build the New York Stock Exchange, which is what they did. They created a private organization that would create the trust necessary to allow contracts to happen in a trusted way, like JP talked about. And that organization, the New York Stock Exchange, again, was very centralized. Private, not government, but it had a few people who were in charge. It had judicial branch, legislative branch, they had enforcement. That still exists with us today. So again, there's an exogenous shock and governance kind of adapts. And I think we're at the stage now where we're moving from, and to pick up on something Porter said, the Postal Service, email disrupts the Postal Service and completely decentralizes our ability to send messages to people. And we're seeing a similar kind of change with Web3 and its push towards decentralization. And I think the real challenge, just thinking about this from as a lawyer's perspective and seeing governance, is, and I think this is the way Gensler sees it, is right now in our primitive, I don't know, on this side of the J curve, whatever that is, the participation, the decentralized participation has not matured to the point where there isn't the possibility that there will be somebody who is able to centralize power and manipulate that power to their own advantage. Even in the versions we have now, where there are these decentralized autonomous organizations, these DAOs that JP mentioned, and they are designed to be a fully decentralized governance system, open source, smart contracts. I invest my ETH with Lido. I turn over my ETH to Lido. They're a staking firm. They're going to verify transactions on the chain, and they're going to use ETH brought from a bunch of other people. They pull that together. They win the ability to verify a contract, and then they'll give me some reward. That system is open source. It's run by a DAO with smart contracts. And that's about as good a governance model as you could imagine, again, from the perspective of regulators, because it's very hard to manipulate that. The problem is that behind the Lido is another organization or another set of tokens, and someone could potentially own those tokens and then alter the lower level, which is these smart contracts and the way that the Lido level is governed. And it's very hard to avoid that problem. It's very hard to avoid someone could change this thing. Even something like a fully decentralized token system. There and with Bitcoin, I guess you'd have to get 51% of the computing power on Earth or something like that to seize it. So that seems pretty secure. But a lot of these governance systems there's the possibility that someone could get control of them. And I'll just say one example of that, which is voting. Decentralized systems that rely on that organization making decisions a lot of times require voting by participants, but voting is something that is costly. If our federal government, Nolan mentioned government, if our federal government wasn't centralized and instead we all voted on things, our phones would be buzzing constantly. How are you going to vote on this topic? How are you going to vote on that topic? And for a lot of people, I just want to eat my cereal and watch The View. I don't want to be voting on this particular policy. And so that means if people are going to be apathetic, then there's going to be a group of people who are able to manipulate that system that work potentially to their advantage. Something like Uber, which totally decentralized the cab business. Uber outcompeted the city of Chicago's taxi commission in offering a better way to provide trust. They did it because of smartphones, but it's very easy for me to participate in Uber, the governance of Uber, the trust mechanism of Uber, because all I do is when I finish my ride, I give the guy 5 stars. And it's part of the process that's built in, and that is very low cost for me, and the stakes are very low. There's not somebody who's going to be able to seize it and be able to dominate the system because the stakes are low and the participation's easy. And to the point that Professor Weinberg was making, there's a killer app there because Uber makes my life so much better instantly. So to get through the Python that Porter was talking about on the other side, you need an app that makes my life materially better and my participation in the governance of that thing easy, and I see the returns from it. And I've not seen that at all in the crypto space. So I think that's the key thing, is something that's like the Uber example, a killer app for people that makes their lives better, where the participation in governance is intrinsic to the thing. It's designed into it in a way that I feel like when I do in Wikipedia, that I'm participating and adding to this communal thing. That needs to happen in governance to raise the kind of participation level. Otherwise, governance is always going to be subject to these kinds of domination by a small cabal, and that will raise the regulators' hackle. Okay, I'll stop there.
Great, thanks. And to back clean up, we have Tony Smith, who's the co-founder and chief DAO officer at Convex Labs, as well as the head of strategy at the DAO Research Collective. So Tony, given your role at the Research Collective, perhaps you could share some information about what you and other researchers and practitioners are kind of doing to address some of the issues that have been raised by Porter and Todd.
Yeah, happy to. I did not prepare as thoughtful and comprehensive a set of opening remarks as my 2 panelists, but so the DAO Research Collective, it's primarily funded by the Ethereum Foundation. Really was started with the mission of aggregating, curating, and distributing research around DAOs. We also put together a number of events with DAO practitioners and people that are applying research from their respective disciplines, whether that be economics or political theory or computer science, or my background's in organizational psychology, which is what I think about a lot. But to the question, I mean, like, we've now done workshops at Stanford and Harvard and one at DevCon in Amsterdam last year, and we've really talked about all the above. Spoiler, like, we haven't come up with any answers as the collective or like solutions. But yeah, all these problems are really important. What I would just say is what gives me the most optimism about DAOs as sort of, let's say, an antidote to big tech harms or this better path towards equitable ownership and governance is how many people are working on, these problems that you guys laid out. Just seeing, I guess, anecdotally at Stanford, I graduated last year, but 3 years back, the number of professors and students that are like dedicating their time to independent research to the topic, now teaching courses on the topic, is growing tremendously, right? And so to me, that's a lot more exciting than how much capital is flowing into it, or like the market cap of DAOs as a whole, or these espoused visions, is how much human capital, like how much time and focus is being dedicated to really like fleshing out these problems.
Great, thanks. So Todd raised, I think, a key issue in the success of these organizations, which is that, for them to have the added value and to work as designed, they really have to boost participation. Some participation rates and some of the early ones are fairly low. Other than the star system of Uber, what are some of the other ways in which broader participation can be fostered, and what are some of the ideas that are out there to kind of get people more engaged in the governance? I'll let you start, Porter.
I think it depends on the business, because you have some businesses that are fairly minimized in terms of what it is that you can and can't do. So the core technical product can or can't be upgraded. So there's some examples out there of that. There's other businesses that require, that I would classify as fully open, like MakerDAO, which is essentially a decentralized credit facility, that are getting bogged down in all of these questions of direct democracy, of do you want a community voting on every single little thing? And so what you're seeing is them trying to reconfigure the org architecturally so that you can have a bit more efficiency in certain things, because there's these tensions between internal expertise and external community involvement. Apple doesn't ask their shareholders to design the next gen iPhone. So you run into these things, right? So the question becomes, where do you want these pipelines? How involved do you want people to be, and when? These are all open questions. Like, I'm not gonna sit here and deny it. What is interesting though so here's some stats on just impact, velocity of ideas, ability to actually make a difference in an open organization at the grassroots level. So BlackRock, I think they're the world's largest asset manager, they're the largest corporate governance participant in the world. Last year, of the votes they participated in across the board, 99% were management proposals, 1% were shareholder proposals. Obviously, that dynamic's completely flipped in Web3 because it's all shareholder proposals, right? There's no one else. Shareholder might be the bad term there, but community proposals. Another good example, there's 20,000 active voters on Ethereum each week right now. In corporations, you vote once a year, so your ability to rapidly iterate in these cycles and get people involved are very different than corporate governance structures. The third thing that I'll state really quick too is just in terms of overall ability to make an impact, you can come in with an idea to these organizations and have it be implemented. Now, maybe it's messy, maybe there's friction, maybe it takes time, like all these things are true. You can't go to Facebook and tell Mark Zuckerberg that you're gonna fundamentally change something about Facebook. It's just not gonna happen. And so this is where we get to this idea of open systems again, where you're just soliciting a self-selecting group of people to come into your organization and provide change, and you're giving them an avenue to provide that change that doesn't really exist in the same way in traditional corporations. And I think that's a powerful thing. It's early on, we're still working through it, so lots of stuff to be worked out. The democracy piece is tough. But what's interesting about it, and I'll end on this, is Web3 kind of combines these strains of democratic and civic governance and corporate governance. And they entwine them in a new way that I think is different and is a net new jump forward in organizational design and hierarchies. And anytime humans historically have messed with new forms of organizational design, you've generally seen that spark innovation on the backside. So you could look at the charter companies that the Europeans relied on during the age of exploration, which combined investors and risk takers in new and different ways. You distributed risk, you were able to reward people based on them providing you resources to go do something. We can debate, if that was a net good or bad long-term for, all the different folks involved. They were rife with corruption, et cetera, but it financed and facilitated these new long-duration missions that they weren't able to do before. You also look at the development of limited liability, the joint stock corporation, the railroads are a very fascinating example there, and what happened in England in the mid-1800s, and also here. And I think anytime you mess with these types of organizational design structures, stuff happens on the backside, and I think that's what we're experimenting with right now in Web3.
Great thing.
Go
I
was just going to respond. So a couple thoughts quickly. I'm going to cite the philosopher Alberto Hirschman's duality of voice and exit, ripping off the shareholder proposals. When I teach shareholder proposals, Rule 14A8, if anybody is a lawyer out there, I tell my students these are crazy. It's somebody who shows up at the annual meeting with a kind of burlap sack full of old New York Times, ranting at the clouds. That's the typical shareholder proposal. And I don't want, as a shareholder of Facebook, shareholders participating in the governance of Facebook. I mean, maybe Paul Singer at Elliott Management has some good ideas, but other than that, keep your mouth closed and just take your dividend checks. And the reason is you can buy another company. We have competitive markets. If you don't like what Facebook's doing, buy some other company, so you have exit, very low cost exit to somebody else in a competitive market. And so your voice, you don't need to have voice. The model of shareholders should be really involved has this potential benefits, but it's a little bit strange. Why do I want to be involved in the governance of an entity that's making loans? Why don't I just want to hire a really smart Harvard Business School grad who will be able to do that, just division of labor? So that's a paradigmatic shift. The other thing I'll just say about this is participation is a double-edged sword. The CFTC issued a criminal case or civil case that could have been a criminal case about this Uki DAO. And they came after not just the people who were ostensibly running it, but also the people who were the holders of the tokens, claiming that their participation in these votes made them part of the operation. as a shareholder in a limited liability entity, I can just walk away and not be held liable because all I gave them was my money. If I gave them my money and all my votes and all my expertise on a continuing basis, then I'm a participant in that entity. And this is why corporations were invented, so that people could just turn over their money. So that's a real problem. This participation leads to liability. That's something that's common in law, especially in a world in which the United States government today, from the Biden administration to Chairman Gensler, who seems to be running the crypto ship regulatorily, I think badly, they are very anti-crypto. Every word coming out of their mouth is very anti-crypto, and that means I would be very worried about actively participating, because participation usually brings liability.
Let me push back on the first thing you said really quick.
I'm going to put aside the liability because I agree. I do wholly disagree with the first part, which is we don't want people participating in the governance of these companies or platforms or what have you. And point well taken on the serial, I'm busy, I don't want all these votes, et cetera. To the question of how can we design better systems for participation, right? To create better, a better set of conditions to sort of encourage that. I'd say it's getting better, right? Now protocols are dropping, airdropping tokens, and they'll ask you at the onset, hey, here's sort of our value set, you can delegate, they'll give you a mechanism to delegate right away. I'd say there's too much sort of avoiding the responsibility of education in the process of why should you be interested in this and what does it mean to participate in governance. So more people should do that. And to the point on, I'm busy, I want to eat my cereal, and I don't want to vote every day. There are a ton of votes that I think are unnecessary in DAOs. I'd say to the extent that you do delegate or that you want to opt out of a set of it, you should have that experience created for you, right? You should have an application that says, hey, I'm going to delegate it, but I still want the transparency, right? I want to see on a weekly or monthly or quarterly basis where my allocation of tokens went towards voting against. And that is more readily achievable, I think, with DAOs than it is, in other constructs.
I'm usually hesitant to get into debates with law school professors, but I'm gonna take the plunge here. So a couple things. On the Facebook piece, this is the whole problem with big tech, though. There is no exit strategy. That's the whole problem. There is nowhere else to go. Why do the Russians go to Facebook? Why do they go to Twitter when they want to mess with our elections? It's where everybody is. So you have an innovative product. It develops over time. You get more and more users. More users come because all their friends are on, classic network effects. You create this very incumbent, very powerful platform, and there's gravity associated with that platform. There's gravity that brings all these people together. And it's very hard to break the bounds of that gravity. And so what ends up happening is, over time, incentives get misaligned. The platform is interested in the platform's perhaps often short-term success. They don't look at long-term participation rates. They don't want to give up power, which historically long-term is the best way to have a resilient thing, whatever that is, organizational structure. And what ends up happening is you don't have a way there are no other exit strategies or options. And when you're dealing with constitutional issues, which we often do with these social media platforms, whether it's freedom of speech, freedom of the press, et cetera, generally the way that societies have dealt with those most successfully is through democratic means. And so if you don't have some form of democratic process that allows people to adjudicate these issues in a way that a common community can come together and talk or debate stuff, it generally leads to issues with credible neutrality and lack of legitimacy with the platforms. And so an interesting piece of Web3 that I would encourage everyone here to take a look at would be the social media implications of this. You can govern social platforms in new and different ways now than we can. We have a new model. We didn't have a new model before, right? So I like Elon Musk. I think what he does with SpaceX and Tesla is amazing. Do you want one person in charge of Twitter, though, right? It's the new public commons. Maybe you do, maybe not. But the point is, maybe we should have a second different option that is community owned and governed, and that does offer people the ability to partake in these debates in a democratic way. Historically, which we have done when we've done it successfully, is the way that these platforms long-term end up, I think, having the most success. And so there's some dynamics at play here that I think lead us to maybe we want this new different avenue over here, that we can play around with these things and figure them out, because the incumbent structures have problems associated with them.
So Porter partially preempted my next question, which was about social media platforms. in their governance. Clearly, we have two models now. There's two proposed models. There's the corporate model, and then there's the potential for government regulation. It seems to me that Dow's decentralized governance presents a third model. I'll frame the question around how is that likely to happen. We saw with Facebook, they tried to have an outside commission make content moderation decisions for them. Didn't see very much control, and it didn't work very well. So what are the incentives of Facebook to go to a different model, or what are the potentials for other platforms to develop that use decentralized models to displace Facebook or complement Facebook and Twitter?
That seems directed at you.
I'll be quick. I'll be quick
Not the
here because
law
I've been talking too much. Yeah, I've been talking too much. I'll be quick on this one. I don't think there are incentives for them to do it. I think you're going to see a net new platform emerge because they don't have the incentive structures to do it.
And they'll be able to compete with the existing platforms?
I think so. I mean, the reason why, there's a couple reasons why, but the main reason why is what Web3 offers is you can have a base level protocol, and then you can build different apps on top. And so you can have different algorithms for those different apps. You can have a credibly neutral one. You can have one that leans left, one that leans right, whatever. There's a lot of different ways you can do this. And the point is that at the end of the day, what you enable, though, is a little bit of freedom of choice. But I also think what you enable is for people, if they have a say and can, in some sense, own the underlying platform, it's just a very different dynamic than joining a platform that exists that is kind of, monopolistically owned by folks. And I don't think they mean anything bad by it. I just think, like, you see this time and time again throughout history, where when you have organizations or structures that are owned by a certain group of people, over time their incentives get misaligned with broader incentives from society. It just happens. And so what you want is a way to create a credibly neutral platform at the base layer that can then allow for different implementations of it on top. And so that means you can govern algorithms differently. You can see what the algorithms are. If you want to know why Twitter open sourced their algorithm, I personally think Web3 had a lot to do with it. Because Farcaster, which is kind of a Twitter competitor in crypto, you can kind of take a look at these things and see what's going on under the hood in ways that you just can't on these social media platforms. So anyway, I'll turn it over to you guys.
Yeah, so I just a couple thoughts. First of all, I don't disagree at all. I'm very much on the pro crypto, disrupt the whole thing side of the fence. So just to be clear about where I'm coming from, I think that what I was trying to point out is that there's a challenge in the design of a different model of social media company in terms of how they approach their governance, because we all can't be voting every time Henderson posts some idiotic meme that's slightly sexist. Should Henderson be banned? Like, we can't all be voting on that. So there needs to be the thoughtful design of how participating individuals participating in a radically decentralized governance, what that looks like, what things should be voted on. How should the other things be done by algorithm, and then we're voting on the algorithms, or we're voting on the, I think that's the key point I was trying to make, because the genius of the Uber model is that is really easy and straightforward. To your point about education, like the first time you use it, it's just so intuitive what you're doing and how it's valuable, and it's tied to your immediate experience. And I think that's something that the Web3 designers need to be thoughtful about. And if they can do that in a thoughtful way, then I'm all for it. Shareholder participation doesn't make any sense in governance as an investor, not as a participant, but as an investor in a company. That doesn't make any sense. And to get our minds to this new place, I think, is going to be a challenge. The last thing I'll say is, I find it interesting that, just getting back to the politics of this, the Venn diagram in Washington of politicians who don't like big tech, and the Venn diagram and the circle of politicians who don't want or opposed to crypto, those things overlap perfectly. And that makes no sense. If you're Elizabeth Warren and you don't like big tech's concentrated interests, then you should be all for Web3 and crypto. And I think for some reason, like, that educational gap has got to be breached, that you would think Liz Warren's power to the people, against the big companies, we're against intermediaries, because intermediaries are the ones who line their own pockets and achieve their own political ends, and they deviate from what the people actually want. It should be the Democratic Party who's really pushing behind crypto and these changes. And I think there's the very last thing I'll say is one thing about the trust market that JP talked about is government is unique here in that government is both a regulator of the trust market, as we're talking about it, and also a participant in that market. Bitcoin threatens the Fed. The disruption of trust in all these areas has a potential to disrupt a lot of services that government provides, like Uber knocked out the taxi commission. And in a world in which you're both a provider of a service and the regulator of other people providing that service, there's a real risk that government will favor itself in the way it regulates. And I think we're seeing a lot of that today, that government's hostility to this disruption is really because radical decentralization threatens government power, even though it might have these upsides. And so I think we need to be thoughtful and skeptical. When government would say like, oh, Uber can't exist because it's unfair for the cab, maybe that they're just serving their own interests as government.
Yeah, I was going to say, I mean, I agree with Porter that it probably is not going to be achieved with incumbents. However, I would like to sort of theorize on something that is practical and maybe could be achieved, right? So I'm a course assistant for a Dow class taught by 3 professors, but one of which is Andy Hall. He does a lot of work with meta and governance. And he talks about, like, early on in Facebook's history, they did this sort of open platform vote where users could vote on different sort of things that might impact them, and then like no one participated, right? What I haven't seen is like why that was the case. I think, you know, maybe how it would be achieved is you do a very small experiment, you know, within these companies, right? You utilize blockchain technology. You start to do that education piece, you distribute it out to a representative sample of people, and then you get like real data on it, right? And then you distribute it out via credible sources like Princeton or what have you. And even to Todd's point on all these questions about like we should think about what should be voted on, what shouldn't, how can algorithms be used, et cetera. You know, people are doing this work, right? And so there is progress on all these fronts. I think that work needs to be surveyed for people that are gonna launch DAOs. That needs to be shared with them. And again, like, you know, as you all are sort of tackling those open questions, there should be an aggregation of all this work that's being done and say like, hey, here are all the options or the different standards that you could go about doing this work, right? And we can point to real experiments that are taking place, and here's the data, and then learn from it and iterate and get better at it, right?
I hate to be a wet blanket on one thought here, which is the idea of additional participation in voting. Again, this is a law point. Shareholders participate in the voting in corporations. There's an entire section in the US code that regulates the disclosures that are necessary for voting. And it leads to liabilities for companies and proxy vote. All these things are massively governmentalized. And so as you expand the range of voting, no one thinks when I give a 5-star to my Uber driver that I'm participating and voting in anything about governance. And that vote is just like, it happens and the collective sees it, and now I'm helping all these other people by creating this trust mechanism. Now, I'm a participant in some new social media company. I have tokens which have some economic stake, and I'm voting. Holy moly, every lawyer would tell you, Section 14 of the securities laws, now there's disclosure obligations and proxy. This is not something the government is just gonna walk away from and say, oh, okay, you get to vote on these things. So that's a real worry. There was this thing called crowdfunding, which was a new internet way of raising money, and companies and people had a different dynamic of how they thought about investing or whatever. And Congress passed a statute and the SEC wrote rules and they killed it because it was new and weird, and let's try to fit it into this old securities paradigm that we have about disclosures and brokers and licenses and whatever, and murdered. So the more we push in this direction, which I'm all for, I just worried about this regulatory threat.
Can that be
that's a fair point. Yeah, go ahead.
I'll just say, right, like you don't need to tie the economics into it, right? You could just have the governance. You don't even need to like sort of frame it as a corporate governance, like typical proxy voting type process or what have you. It could just like be framed as a survey of our users or what have you, right? But like the point is you would still be utilizing the technology to understand like, is there actual utility to going about, let's call it like participation with our users in this format, right?
There's also different dynamics to participation beyond voting, right? So you have physical participation. Look at a network like Helium, like decentralized. It's a decentralized IoT network initially. They're moving to 5G now. So basically, through crypto economic incentives, they've convinced people, hey, you get an ownership claim in the network. You go out, you purchase this Helium hotspot, this piece of hardware, and then you deploy it, and then other sensors in the network can tell if your piece of hardware is live or not, and you'll be rewarded with ownership in the network as part of that. So you're not voting, perhaps, in operational decisions of the network, but although you can, but what you can do is physically participate in the network in a new way. And if you're a telecom company, this is very interesting, because their biggest problem right now is how do you raise capital to go build this new hardware network, which is very expensive and hard to do. And now all of a sudden you have this new model, right? You have this new model where you're decentralizing the hardware capital raise costs out to folks that participate in the network with you, and they're building a network on your behalf. Helium has 400,000 hotspots worldwide today for the IoT network. It's the largest IoT network in the world. So they've proved out the supply side of this. The key is the demand side. IoT demand isn't what 5G demand is going to be, so they've pivoted a little bit to the 5G demand too, and they're partnering with Dish Network to bring this live. One other very quick example that we haven't touched on at all that I think is super fascinating and could be one of the critical application unlocks moving forward are NFTs, which we're not going to call NFTs in 10 years. Like, it's just going to be digital. It's bringing property rights to the digital world. So for the first time, we can, in a cryptographically, mathematical way, secure items digitally and provide properties that before were only provided in the physical world. So you get into scarcity, authenticity, et cetera. The big piece with this, though, is if you're an NFT community, everyone's like, why would I ever want to own one of these things? What's the deal? Well, they have a new way of creating intellectual property now that I think has also inverted the traditional way that the entertainment industry has done this, where you can get involved on the community side of the house. So the common thing that we hear in investment pitches is, hey, we're going to have community-owned content or a community-created Disney. And this is interesting. So there's a lot of very talented people in Hollywood and elsewhere that are already in the industry, but there's a lot of talented people that might live in Des Moines, Iowa that aren't and never got a shot. And maybe they can take a shot now that they never could get before. And the point here with this commercialization of IP, this is an open question on the business model side of how do you do it, but you create an NFT community which has these things that are in the marketplace and people like and they enjoy whatever, and you can go build things around it. This is what Disney did, right? So you have a cast of characters, you build stories, TV shows, cartoon shows, et cetera, et cetera, et cetera. And it's evergreen, this content keeps on giving. You can now have communities form and self-select, as I mentioned before, and create content in a new way that they couldn't before because you have digital property rights now, which did not exist before. And the thing that's really important here, again, is there's no voting necessarily involved with this. There could be, but it's a different form of dynamic digital participation, and it involves new ways of coordinating people. And so this is when we start getting into the really interesting frontier stuff that I think we're dabbling with, but we have not figured out yet. But I think the tailwinds are there. If you look at the NFT overall marketplace right now, there's been hundreds of billions of dollars in transactions. And it's just giant. And video game companies, I know we're up on time, you guys are gonna kill me, but video game companies have figured this out, right? The video game market in the United States is larger than sports and movies combined. Why? They're at the frontier of business model innovation. And what they figured out was, hey, put a quarter into this thing and you can play it back in the 80s. And then they go, wait a second, what if we make hardware and you sell hardware? Okay, so we do that, so we get PS2 or whatever, and then it's like, hey, let's sell a $40 game with it. Okay, so we do that. Well, what's next? Well, wait a second. What if we don't worry about the hardware and you just play online from your computer? Now we disassociate hardware costs. Maybe we give the game to you for free. Ooh, maybe we sell you stuff in the game. Turns out that that's a big business, right? You look at Roblox and all these other folks, this is what they start doing. Then Web3, all the video game folks in Web3 look at this and say, wait a second, what if we sell you stuff in the game and then you own it? And then you take it to the next game. And now you're looking at the next frontier of business model innovation on the video game side. That can play out in every other vertical, though. Video games is just very good at figuring it out early.
Great. Thank you. With that, we should open it up to questions from the audience. We have a couple up here. Yeah, just wait for the mic.
This has been absolutely fascinating, and I hope in the future when we do this, we can put a bubble up there, which is not only sort of who the people are and their backgrounds and their accomplishments, but what their alignment of interest is. Because ultimately, in this new form of technical innovation, there are just incredible alignments of interest. And I guess the question that I have, as sort of feeds through all of this is, how concerned are you guys about what I call the agent-principal conflict? Meaning that when somebody starts a new protocol or a new piece of innovation, and they're going to get investors, and those investors are going to get tokens, how does that change their viewpoint on how they're going to operate their business? Because I wonder when I look at the venture community and they're making investments in protocols and they get, sort of early tokens in that protocol, and that drives their decision-making process, and then those tokens get on-sold to retail and how that gets regulated, and they're just different levels of information. How important do you think that is to the innovation process? Because I look at this right now and I say there are a couple of really fundamental, unbelievable innovations that have happened in the market, and there are a lot of people out there that are using the value creation and the potential of those real innovations to sell an unbelievable amount of stories to an unsuspecting market. And I look at it, and I think we were debating here, and I think Joe, one of the founders of Ethereum, and I were debating, and Joe thought 90% of what was out there was pure shit, and I thought 99.5% of what was out there was pure shit. But I worry about it as, I think, Todd, you framed this perfectly, in terms of the disclosures of what people's alignment of interest, how important that is in the debate here. Because as you say, in Uber, you've got, the stakes are so low that you do have this process of governance that works in that case. But when the stakes are so high, how can you get the information that you want without doing real primary research, which none of us have the time to do?
One of you want to take that?
So we, Convex Labs, I didn't talk about it a lot, but we actually raised with a SAFT, right? So we have an agreement for future token distribution, what have you. To the point of maybe your very last statement of the due diligence required, sort of not having the time for it. I would say, maybe this is like a simplistic answer, but you should make the time for it. And sort of who are the stakeholders that you're actively like joining some arrangement with, and then as you, again, like espouse these values to your community around, hey, we're gonna distribute out to a wide group of people and have equitable access and everyone can influence decisions. People need to hold whatever that initial group that's distributing the tokens accountable to actually realizing, what they're saying they're going to do, right? And there should be transparency. You can't talk about one of the values of DAOs being transparency, which most people do, and then don't live up to, that principle, right? And so people should be held accountable to that. I guess is the short of what I'd say. Like, investors should make sure that they're aligned with the entrepreneurs they're investing in, and the community that's sort of taking up the end of this J curve, like what Porter was talking about, should ultimately know what that value set is of investors and entrepreneurs, and make sure they're aligned with it, right? Because then there are going to be problems that arise.
So I think it's a great observation. And I took Burt Malkiel's finance class here at Princeton, and he completely convinced me that it is utterly irrational to invest in individual stocks and to be a buy and sell investor. And if you believe him and you follow your logic, then we should ban people from buying and selling individual stocks, because buy and hold is the right strategy for the average bag of donuts like me. And it's just like going to Vegas to do anything else. And we don't do that. We don't do that because we think, well, we don't want government to do that, and this is America, and there is gains to liquidity in the markets and all these instrumental values. And if you tell people you can't invest and you can't, do these kinds of things, they're going to go to Vegas. They're going to bet on Betfair and bet on, which March Madness team, whatever. So I think at some point the paternalism has to give way to, we don't know what's going to happen. People are going to make mistakes. Fortunes will be made. There are going to be fraudsters, and we should go after those people when they are intending to commit fraud against people. But I think if we have the attitude, which it seems like the government does now, which is that most of this stuff is terrible and there's, just scammers and whatever, then you risk killing what are going to be, if we'd done this at the beginning of the internet, there were a lot of bogus companies and failures, and yet on the other side we came out with the biggest, most valuable companies in the world. And if you believe in this stuff, I think we need to get there, and that means there's going to be losses and problems in the short run. The Biden administration issued a white paper that laid out all the things that we should do and all the risks and international human rights and equity. I mean, if you read this document, if that document had been promulgated with the dawn of the automobile, at the dawn of the internet, we never would have had those things. So we have to tolerate some kind of losses. I agree with Tony. We need to educate people to be leery of Dogecoin and whatever else it is. But on the other hand, we have to encourage people to be taking risks. 95% of restaurants fail. The government doesn't say you can't open a restaurant, and we all benefit from people who start restaurants that even in expectation they know are going to fail.
Can I just say really quickly, some of these cryptocurrencies aren't necessarily like DAOs or organizations that have some like open-ended complex future goal or what have you, but specific to that kind of type of DAO, we talk about, with these tokens you have economics, you have governance, and you have utility. People need to own the responsibility inherent in all three aspects, right? Or otherwise have some mechanism to opt out. Effectively you're distributing out corporate governance to like everyone, right? And corporate governance comes with a set of responsibilities. And like, if you want to participate in a DAO in that way and you really care about this sort of principled stand of distributed governance, you need to like own the fact that comes with a set of activities that you need to participate, responsibilities that you need to uphold. So I guess like when people say I want like the best of, like I want my cake and eat it too, it's just like, I don't think we should be encouraging that.
We get another question here.
Yeah, so two pieces. First, I'm aware of a lot of exciting innovation in the Ethereum space, and so I stick by my number at 90%.
Which was 90%, is that what it was?
Yeah, 90% shit, I believe it.
Yeah.
Exactly. I guess the extra 9% comes from innovation in the Ethereum space and related spaces. The second piece, sort of following on Porter's remarks, if we take this decentralization thing to its logical conclusion, where we have rigorous decentralization across lots of different dimensions, I think we get rid of the platform, or the platform becomes us. The third option, sort of decentralized governance of these social networking platforms, that's still capturable. It may be better, but you're still collectivizing a bunch of things. You're not creating unique or idiosyncratic approaches to what you want from a social network, essentially. And so I think the social networks of the future are going to be user-centric, user-controlled. I'm going to own my own profile. I'm going to have control over my own personal information. I'm going to be able to designate under what conditions I share that information. I'm going to control my social graph. I'm going to construct it. So we'll have decentralized IDs and verifiable claims or credentials, or maybe it's NFTs that are holding us together in different contexts. I may have several different social graphs that I build and maintain for different purposes. And then I'm going to invite tool builders, services, to come and operate on my social graph under my control. And so I will be able to publish things that I care about. I'll be able to subscribe to things that I care about. And so if I'm going to turn this into a question, maybe to Tony and Porter and maybe Todd, can we imagine the world of business, which is platforms upon platforms, can we imagine rigorous decentralization of lending companies, for instance? I guess we can. But can we take this? Are there any places, Todd, where we don't think we can rigorously decentralize the global economy?
You want to start with anything you think can?
The only thing I would say, I'm totally inspired by the vision. This sounds like science fiction to most people. The average person cannot imagine this any more than they can imagine global warming raising the seas. And that getting people to act in ways today that are based on some future hypothetical whatever is incredibly hard, as the people in the global warming space find out, like getting people to do stuff today, especially when you're up against regulators. So I think that's a huge amount of challenge. I've written a book about the history of trust disruption, going back to medieval Flanders and how the different trust provisions have happened in this market. And the lesson from that is, the answer to your question is yes, it will happen. Somebody will figure out a way to do it. Trust is always being remade based on exogenous technological shocks that you've described. It will happen. It's going to be messy. The incumbents will not go lightly, whether they are government or Facebook, but it is going to happen. The key, I think, for us is to try to, as a group, make the case to the regulators to get them to see tangibly what this future could be so that they can get out of the way and let it happen more quickly. But it's definitely going to happen.
It's a very thoughtful question. I think there's a tension, and the tension is that you get efficiency gains and you get network effects around larger platforms. And we've seen this through big tech, and you see it to a lesser degree, I think, in the Web3 space, although there still are. For example, Uniswap, did more DEX volume last month than Coinbase did. In fact, Coinbase fed into Uniswap. And so that brings up an interesting point, which is, I think at the infrastructure layer, you could have public infrastructure like Uniswap smart contracts that a lot of other people end up building on top of over time. And I think you could see public infrastructure in a number of other areas. To specifically answer your question of where else this could go, I think media and entertainment's interesting. I think you could see some stuff happen there, specifically the music industry. We've made a couple investments in that space, and I think there's a lot there. The other piece I think that could be interesting moving forward, getting outside kind of the traditional realms, are the ability for people to create net new tech. Like, so for example, with zero knowledge proofs, right? Like there's new things you can do on the back of zero knowledge proofs that you just can't do today. And I think the question becomes, though, how do you do that in like an individual node basis versus a platform basis? Because people are going to generally drift and aggregate towards the best tech out there, which is this tension that exists where you end up creating some form of platform all over again.
Right. So, Tony, if you have a response, I'll give you the last word.
Yeah, it looks like I have 20 seconds. I'll make it quick. I can't imagine any platform or organization that won't be able to be decentralized over time. I'll say my background's in organizational design and operational design. So like, I think about organizations as like a bunch of different parts that someone's organizing towards achieving some effective march towards some objective. And I think it's ultimately going to require some type of like DAO operating model where someone's doing that work, right? Roles are clear, activities are clearly processes are mapped, et cetera, et cetera.
Great, terrific. Well, I'd like to thank the panelists, and it was a terrific discussion.
Yes, this